How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was reported on April 14th, 2020. Here is a brief snapshot of the positions held by the major institutions as of that date. And so let's start by taking a look at gold. There we go. Alright, so let's take a look at gold. So if we take a look at the charts here, this data represents this move to the upside right here. So price was consolidating. We see that they were taking profits on their long positions from 287 down to 279, and then price rallied upwards, and as price was rallying upwards, they added to their longs from 279 back to 286. Okay, so as price was rallying up, they added longs, which caused price to move to the upside, and as price was moving up, they added to their shorts from 30,000 to 34,000. So the first thing we can take a look at here is, when you take a look at short positions, we were in that range before, 36 to 35, nothing out of the ordinary there. So coming back into the 34, that's not really telling us anything. At the end of the day, the shorts are still very cooled off, and longs used to be very aggressive, not so much lately. The long exposure is still high, 90, 89%. Net positions still very bullish. All right, but dynamics are starting to slowly shift. Okay, slowly shift. It's too early to tell whether or not we're going to see a collapse from these highs or not. But we definitely know that one of two things are in play. Either they are going to continue taking profits on their long positions just like they have been, or they've been releasing a lot of their long positions for profits so that they can re-engage at a later time. I think it's likely the first situation rather than the second, but we'll see how things play out. Now we take a look at oil. Oil. So we take a look at oil and we see that as price was dropping here, they increased their long positions from 655,000 to 700,000. Quite a significant drop. Okay, quite a significant drop. So basically, all throughout this drop here, all the institutions have been doing is accumulating long positions. Interesting. And at the same time as this drop was taking place, they brought their short positions from 170 to 189, basically back to where they were previously. Okay, and then we see price dropping. So what can we see here? I mean, the first thing that pops out is the total positions, 890,000, and we look at the maximum positions that they've held in the past, 1 million. So we're not too far away from that. Okay. So I think eventually oil is going to bottom, and then we're going to see a rally form, and I think that's probably the reason why they're buying, because this is cheap for them to buy at these prices, very cheap. Especially when you see how the institutions trade oil, they are not in and out very quickly. They get in, they hold for quite some time. So I think they're getting in at really cheap prices with the expectation that things are going to reverse. And especially with the economy right now, there's a reason why it's so cheap, right? It makes complete sense. It matches what is taking place in the world. But once these lockdowns get released and people start going back to their way of life, this is going to skyrocket. So I think they're just preparing for that. Okay, so let's take a look at the US dollar. The US dollar, we see that price was dropping here, and as it was, they increased longs and they increased shorts. So the data is not really telling us much. All right, if you take a look at long positions, they're cooled off. You take a look at short positions, they're cooled off. You take a look at total size, they're cooled off. They're not even committed to the US dollar at this point, at least the contracts. They're not committed. We take a look at net positions. They're slightly bullish, adding a little bit more over the last few weeks, but look at the coloration of the cells. They're bullish with a tinge of neutral, so there's not really much to see here. We're dealing with this monthly chart as I detailed in the latest EURUSD report. There's a specific thing that's taking place on the monthly chart that we're waiting for. So take a look at the report, read the details, and you'll see exactly what I am talking about. As for the Aussie US dollar, price was rallying up sharp here, and as price was rallying up, they closed off long positions, reducing them from 26,000 to 22,000. At the same time, they also reduced their short positions. Bottom line, because they reduced both, the sentiment is still bearish, and net position is still sitting at negative 35,000. So what's going to take place? Well, we're probably going to see some more bearishness, okay, but doesn't mean that it's going to drop right now. I think over time we're going to see some more bearishness, but in terms of the position and getting into a position, the charts are not really giving us anything very strong. Okay, we're waiting for some trade signals to pop up, and when they do, we'll jump on them, but right now there's really nothing to take a look at here. And in terms of the positions here, you know, very aggressive. They took profits. We were mentioning that before. And now we see the push upwards. So they are taking profits. So it's not really a good time to be engaging in a market when they're in the midst of taking profits on positions. So let's move on. US CAD, what do we see here? US CAD, they pretty much did nothing with their long positions and just added slightly to their short positions as price was dropping. Okay, so we look at longs, 70% geared to the long side. We look at net positions. They are in the positive, so there is a bullish bias. Bullish bias, we are expecting price to go higher in good time. We are waiting for that signal to present itself first, but we are looking to engage this to the long side at some point. So everything is aligned with that. We want to see a stronger long position than shorts, which is what we have. We want to see the sentiment showing bullishness, which is what we have. We want to see net positions in the positive, which is what we have. Okay. When you take a look at the average, their average is 48 for shorts. We're 18, and the average for longs is 47. We're below that. I'd like to see it start creeping up towards it. Alright, so now let's take a look at the US Swiss franc. What do we got here? US Swiss franc is not the most ideal chart. And the reason being is because if you take a look at the data, longs are very cooled off, shorts are cooled off, bearish bias, net positions geared to the negative but approaching zero. No trends. We got price in between zones, came down to weekly, stuck sitting underneath the trend line. Not ideal, okay? Not an ideal trade, not an ideal chart, not an ideal positions. So there's not much being revealed to us here. All right, so we go to the Euro US dollar. And what do we see here? So we see that over time they are definitely switching from bearish to bullish. Okay. Now, are they switching from bearish to bullish because they're expecting or they're preparing for price to go higher? Well, let's take a look. Shorts, 271,000 back in February. Now we're at 78. Look how quickly they got out of those short positions. So they used massive volatility created in the markets from rates being slashed. They use that to get out of their short positions. Okay, this is like incredibly quick how fast they did that. And at the same time, when you look at long positions, they slowly have been increasing them. Okay, so we're watching this. We know what to watch for. I detailed it in the latest EURUSD report, so if you want to know the details of that, go and take a look at the report as we have detailed it there. But very important to pay attention to how quickly they got out of short positions. Now we take a look at the pound, and we can see that the pound long positions are cooled off, short positions are cooled off. Again, this is not ideal. This data doesn't tell us anything. Okay, they're so cooled off, they're so uninvested, if that's even a word. They're so uninvested right now with the pound, with total size being very cooled off, 57,000. That's nothing compared to, you know, the 211 that they have reached in the past. If you take a look at the sentiment here, it's like neutral bullish, nothing important, nothing big, Take a look here. They used to be bearish, they used to be bullish, now 3,000. I mean, positive 3,000. This is on the verge of being zero. You know, they're very much neutral. So the data isn't suggesting any type of direction at this point. So if that's not giving us high odds, we move on. US dollar, Japanese yen, what do we see here? Longs have been very cooled off for the last few weeks. Shorts are somewhat aggressive. Total size is very cooled off. Well, cooled off, I should say. Sentiment is somewhat bearish because of the numbers, and net positions are in the negative right now. So does that mean price is going to go down? Well, if you look at the dynamics of the chart, we couldn't necessarily say that that's what's going to take place because, well, there isn't strong evidence to suggest that at this time. Although, as I've detailed in the latest EURUSD report, if you take a look at what is taking place and what Sherlock has to say about the dynamics, there are certain things that we can expect. We just need to wait for those to present themselves first. Okay, Kiwi, US dollar, what do we see? Longs very cooled off, shorts somewhat aggressive. We take a look at the coloration here, a little bit bearish, and we take a look at this in the negative. Does that mean price is going to drop at this point? Not necessarily. Okay, we have reacted from demand. Price is pretty much sitting stagnant for some time now. Longs are cooled off, shorts are still the more aggressive, and we got a sentiment to the bearish side. Okay, I think there's a good chance that we're going to see more lows coming on this chart. We are waiting for a signal to present itself for us to get into a position at this time. So just by looking at the data, you'd see that there is a bearish bias. They took some profits, and so we were in a profit taking phase, and then they increased profit taking phase. So let's wait until we start seeing them accumulate something, and then we'll know with more certainty what they are about to do. Alright, so that's it. There's your CFTC report for April 14, 2020. Hope you enjoyed it. If you have any questions, want to learn more about the CFTC report, EURUSD report that we do, or about the lessons, the classroom sessions, and all that other stuff that we do, you can reach us at www.whiteoakfx.com. Thanks, and have a great weekend, or great week. Take care.